Greetings and welcome back to The Pride. My name is Muphasa El Matador. They call me the Curious Cat. My job is pretty simple. I help grow your conviction. Conviction to buy, conviction to sell, conviction to hold. And today we're looking at one of my personal favorites, DEO. You already know out here in The Pride, we only invest in trends that are going to last the next decade or more. And today's trend is liquor. DEO is at the center of all of the iconic brands that we love all across the world. I'm talking Ciroc, Captain Morgan, Johnnie Walker, Baileys, Smirnoff, Crown Royal. Can't forget about Guinness, Don Julio, Casamigos, and the list goes on. In good times, people drink. In bad times, people drink. My question to you is this: do you know a future where people don't drink? Let me know in the comment section below. Like and subscribe and join me as we explore DEO as a company. We do financial analysis and technical analysis, and all of the links are going to be below. With all of that said, DEO is a truly global company with operations in over 100 countries. This company has a truly wide moat as they have over 200 brands underneath their name, and these are iconic brands. Number one in most of the segments. Don Julio is the number one tequila, Smirnoff is the number one vodka, Guinness is the number one stout, Baileys, Crown Royal, and Johnnie Walker are all number one in their different segments. And this gives them a truly intangible advantage over all of the competition. People come in to drink and they have their favorite drink, and they're willing to pay more for their favorite drink than a cheaper alternative. And that is where the advantage goes into DEO. Also, when it comes to inflation, which is a big issue right now, most of their whiskey is aged and all of the production is done 10, 12, 15, sometimes 60 years before it actually gets to the market. And this gives it an increased value the longer it's aged. All of this put together puts DEO in a truly advantageous position when it comes to the products that they have, the brands under their umbrella, and their global footprint. They can easily get things to market, and they're positioned to continue to dominate going forward. The Russia and Ukraine situation has put a little setback, and that's why they currently have a fair market value of $167. We'll be looking at the bullish case and the bearish case and breaking down the financials and technical analysis. The bullish case for DEO is all about economies of scale. With operations in over 100 countries and 200 brands under your belt, it's easy to see how DEO can command a higher profit margin than the competition. With a dedicated sales team of over 2,000 employees, when bars and clubs are looking to re-up on inventory, DEO is a one-stop shop for all of the fan favorites. The CEO came out recently to let us know that people are now drinking better. And when you have premium spirits to offer the consumer, it's easy to see how DEO can dominate for the next decade or more. The bearish argument against DEO is something that I find really, really interesting. First, I have to agree that the cyclical nature of spirits compared to beer is something to consider seriously when investing in DEO. If the global economy continues to slow down, we could see a slowdown in the demand for high-end spirits that DEO holds. As people stop drinking better and go for cheaper alternatives, the bottom line of DEO could be hurt pretty bad. Second, the Chinese government is looking to crack down on individuals receiving gifts in the form of alcohol. These are government individuals. Don't give government individuals of China no alcohol to drink. The Russian government is also looking to decrease the alcohol consumption for the Russians. Something I don't think is possible. I don't know why. Another thing to consider. These are just few regulatory interventions that could hurt the bottom line of DEO. Finally, DEO's strategy of growth is around mergers and acquisition, and this gives them a susceptibility to overpayment for the companies that they're going after. And these are things to consider when investing in DEO, things to watch, things to look out for. All investments come with risk. No risk, no reward. With regards to DEO, the risks are actually quite tricky. The first one and the most important one for me is Brexit. If the UK was to break away from the European Union, we could see negative effects to DEO's operations as most of their business is done out of the UK. The second one is DEO's cost earned in sterling. If the sterling's volatility goes against other currencies like the British pound or the United States dollar, then we could see negative effects to DEO as well. These are transitional and transactional effects. And finally, most of it is geopolitical issues, because the Scots and the UK also have issues that, if they are not resolved, negative effects for DEO. So DEO, we're going to do the year range first, $163 to $223. We almost hit the first price target for DEO, and we're trading close to a 52-week low. A PE ratio of 29 is really high. We'll have to look at that in comparison with the competition. 3.15 dividend yield is pretty decent. You already know, if you pay your boy to hold, your boy is definitely going to hold. You can see that DEO has been on a downward spiral, so we'll be looking at the technicals to see if that's good for us or not. DEO is also really profitable, and that's one of the best things about investing. You want to invest in companies that have very good balance sheets. We can see that the September and December has brought in huge revenue of almost 4 billion, net income of almost 1 billion. A profit margin of 24.7% is super stellar, especially for a business of this size. They have almost 2 billion cash and cash equivalents. The cost of revenue is high, 1.5 billion, but a company of this size is growing with continuous acquisitions. So we'll be taking a look at the price targets and comparing them to the competition as well to see how they trade. Okay, Remy holds Remy Martin as one of their brands, and Brown-Forman holds Jack Daniels. Pernod Ricard holds Absolute Vodka. Yeah, you guys are the drinkers, so you guys could check that out. There are no price targets for any of the competition. However, DEO has 225 on the low, 240 on the high. So if you're picking it up at 175, you can see almost 40% on your money. If you buy it close to the 52-week low, you're looking at close to 50%. I like to start with the PEG ratio on this end. 2.68 is pretty high, pretty decent considering the nature of their business. And with the current climate politically, Russia versus Ukraine, we can see the business wobble a little until all of that is resolved. The EPS 6.08 is a beast of a company compared to 1.73 for BFA and Remy of 0.34. The P ratio of 27 when compared with 25, 37, and 38 is not as bad as it looks. However, the P ratio is something to watch. This company, the price has to come down before we load the boat, but I'll be nibbling at it at a decent level. Dividend yield, already know, boy's going to hold if you pay him to hold. With that said, let's jump into the technicals. We're going to end this video with technical analysis of DEO. I'm looking at the weekly chart to give you guys perspective on how to trade this one. First thing that I noticed before doing the video, I've been looking at DEO for a really long time, and this is the first time I saw the RSI bleed up to the 30% level. The last time I saw something like this was way back in 2020, March, literally 2 years ago. And this was caused 2 years almost to the day. And this was caused by coronavirus. If you had picked up shares when everyone was panicking, you would be up almost 200% after 2 years. And this is with a sell-off from the high of $223. Currently, the market conditions are caused by Ukraine and Russia, inflation, interest rates coming up this week. It's going to be a tumultuous time. With that in mind, I started nibbling on DEO on Friday at 176. I picked up more shares today at 179, but we will be loading the boat at 156. Our buy up to is $170. If you would like to know how we're playing this from options to shares, hit the Patreon link and come join us in the profit team. If you like content like this, like and subscribe so you can see when we post more videos. With that said, you can see our resistance at 202, major resistance at 223. However, the price targets for DEO as high as $240. They pay a decent dividend. We like it. So you do your own due diligence. I hope I was able to inform and educate your conviction to buy, hold, and sell. With all of that said, it's Muphasa El Matador. Peace.